Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, thank you as always for coming on the program.
Good afternoon, Devin.
Well, let's start with Wall Street, where stocks closed quite a bit higher on Wednesday as earnings came in strong. Also a rise in consumer confidence. The Dow up 1.6%. The S&P and the Nasdaq also both up about 1.5%. What's the story in the global markets?
Revived consumer sentiment boosted stocks on Wednesday. As you said, S&P 500 rose 1.5%, with each of its 11 sectors in green. And the Dow Jones Industrial Average advanced 1.6%, while the Nasdaq Composite added 1.5%. Early gains accelerated after consumer confidence data jumped sharply in December to its highest level since April. Sentiment around the economy and the labor market improved, while inflation expectation for the year ahead dipped to 6.7%, which is the lowest in more than a year. Housing market data is painted a mixed picture. Existing home sales fell for the 10th straight month in November to extend the longest streak of declines on the record. However, home prices, which weighed on activity by soaring to record highs early this year, dropped for the fifth straight month. In Asia, major benchmarks are mixed again today. Shanghai Composite Index dropped 0.5%, while Hong Kong's Hang Seng Index rose 2.7%. Japan's Nikkei 225 advanced 0.5%, which is the first rise after the Bank of Japan's policy change.
Right, and Korean stocks closing higher today, too. Almost all the big names, especially those car makers and tech and so on. SK hynix up for a third day, and the car-sharing company Socar up almost 6% today. Tell us about the domestic market, Professor.
Domestic markets all rose today after today's mixed situation, after yesterday's mixed situation between Kospi and Kosdaq. As time goes by, Bank of Japan's long-term interest rate hike is interpreted as a positive point to Korean economy as it appreciates Japanese yen and it weakens Japan's export price competitiveness against Korean exports. Also, Japan's higher interest rate stabilizes a $1 exchange rate. The benchmark Kospi rose 1.2%. Kosdaq also added 1.3%. In Kospi market, the institutional investors became the main driver to boost the market, which is the opposite situation of yesterday. The net purchase of institutional investors was 885 billion won. All of the 20 largest market cap stocks rose today except LG Energy Solution. Samsung Electronics added 1.9%, while LG Energy Solution dropped 1.2% today.
Well, zooming out, Professor, South Korea is on course for a trade deficit this year, the first one since the global financial crisis. Exports have gone way down in the first 20 days of this month, a decline of 9% from a year earlier. The deficit could exceed $50 billion. What's happening on the trade front, Professor?
Rapid declines of chip export and export to China have made Korea's export slip by 8.8% on year in the first 20 days of December. Korea's exports stood at $33.6 billion in the first 20 days of December, while imports moved up to $40 billion during the same period, resulting in a trade deficit of $6.4 billion. By product, export of chips fell 24% on year, and mobile devices export also declined 43% on year. On the other hand, outbound shipments of automobiles shot up 45% on year, and those of petroleum products export advanced 27% on year. By destination, exports to China, Korea's number one trading partner, moved down 27% to $7.2 billion. Shipments to U.S. increased 16% to $5.8 billion. Korea's total export this year through Tuesday of this week came to $662.6 billion, up 6.8% from a year earlier. However, imports increased by a wider margin of 20% to $711.5 billion, resulting in a trade deficit of almost $50 billion. The sluggish export will be continued by next year as global economy cools down.
Well, finally, Professor, the Finance Ministry has announced a plan for next year for the economy, and it's calling for growth of 1.6%, rather low. In fact, this is the lowest forecast from pretty much any major Korean agency or think tank. How do you see growth coming in next year, and what are the factors there?
One thing that we know for sure about the next year's economic growth is that it's going to be worse than this year. In the last month, key interest rate decision meeting, Bank of Korea updated its economic growth forecast next year down to 1.7%. The KDI, Korean government's largest think tank, also lowered its economic growth forecast for next year down to 1.8%. In line with 1% growth for next year, Korean government finally added its recent growth forecast for the next year at 1.6%, which is one of the lowest among major forecast. Actually, another lower economic growth forecast for next year is Asian Development Bank's 1.5%, which is given last week. This 1% level economic growth is a large downshift compared to this year's 2.6% economic growth. Major factors of slower economic growth for next year are higher interest rate and global economic recession. Next year's market interest rate would be around 8%, and global economic growth would be around 2%.
Right. It's shaping up to be a difficult year. We'll see if anything can be done about that in terms of policy or otherwise. But, Professor, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much, Stephen.